people need to get a loan when they want to buy a house, and unfortunately, sometimes those loans get denied because they do something that totally screws up the loan. What are they? Stay tuned. Hi, welcome to this edition of Real Estate Unlocked. I'm Melissa Spittle, the local real estate expert, and today I have with me Bill Bloom. He is the Vice President of Lending for Guaranteed Rate Affinity, and today we're going to talk about ways that home buyers screw up their mortgage loans.
Thank you for having me.
You're welcome.
So, as I think about it, there's so many ways over the years that I've seen people make big mistakes with their mortgage applications. I think just coming out of the gate, not being prepared in the very beginning to buy a house, like they haven't had their credit pulled. They use like the apps that they get on their phones and say, hey, I've got a 620 or a 680, and then you pull the credit, and it's a much different story when we actually pull their credit. Because the apps that you use, on the Capital One app or Chase, whatever it may be, those are free apps, they're free credit reports. There's not a whole lot that goes into them. But when you actually pay to get your credit report pulled, it's a very in-depth credit report. So there's a lot that goes into that. And I've seen them vary higher and lower, where usually it's lower, but by 100 points sometimes. So and there's 3 credit bureaus. Every lender that I've ever worked for uses the middle score. So like the Capital One app may just use your Equifax score. So you may have a very good Equifax score, but your other 2 scores are bad because maybe a collection reports to one of those or both of those. So there's just so many variables that go into credit. So you want to get your credit pulled early in the process so there's no surprise when you finally go under contract.
That makes sense. Now, I've had a lot of buyers do exactly what you're talking about, and they use Credit Karma.
Mm-hmm.
What are your thoughts on that one?
Credit Karma is good because it gives you a general idea what you have, but again, it's a free app. Unless you're paying for it, you're probably not getting a real accurate idea what's on your credit. I suggest going to see a lender, even if you're looking to buy in a year. Get your credit pulled now to see where you are. That way it gives guys like me a chance to fix the issue that you don't even know is there. I can't tell you how many people that make well above 6 figures. We're talking guys with $1 million in the bank, and they've got a medical collection, and it's like, I'm not paying it. That doctor was terrible. And their credit scores are like in the 500s, and you're like, once you explain to them how much that's going to cost them in rate and what that's going to do to their payment, then all of a sudden they start wising up, like, okay, let me take care of that collection, let me fix it. But we need time to do that. DC parking tickets, Baltimore parking tickets, that stuff ends up on your credit report if you don't pay it. So we want to know that today, so when you're ready to buy in 2-3 months or a year, that stuff's all gone.
Good advice.
I think another thing that comes up is changing jobs after we've already started your application. Or I've had it happen to me twice now, where someone retires and we haven't even settled on the house yet. And at the end of the loan process, we do 2 things that could hurt you. We re-pull your credit. It's a soft pull. We just see if there's anything that's been opened up. And then we also call your employer to make sure you're still working.
Right.
Believe it or not, you need a job and you need income to buy a house. If you retire, that changes the whole dynamic of the loan. I was lucky in both cases where the people that were retiring had some pretty good, like a pension or some pretty good assets that they were able to bring over, and we were able to use that to get them approved. But you need a job to get a home, or you need income that's going to continue into your retirement.
Yeah, and you brought up a good point about income being verified at the end. And I know last year when we were at the height of COVID and in the lockdown, that last step held up some settlements, because with everybody suddenly working remotely, or certain schools being closed and certain businesses being closed, some lenders had a really hard time verifying that employment that last time.
Yeah, and with COVID, there were some overlays, like extra steps that we had to put on loans just to make sure that the people were still working, because as we all know, people were getting laid off left and right. People were getting put on furlough. So we had to make sure those people were still working. The hard part was locating the people that could verify they were still working, because they're working from home.
Yes.
They have different numbers. So we had to do it within 72 hours of settlement. Not our rules. It was Fannie Mae, Freddie Mac, FHA. All those guys came out with those rules. But we had to adhere to them. We couldn't just make it up. We had to document it. So that was tough.
Now, what advice do you have for somebody they're under contract to buy a house, they're going to close on the house in 2 or 3 weeks, they don't have any furniture, so they're thinking, let's go buy some furniture before we move in. Is that good advice?
It's not good advice unless you talk to your loan officer. So if you're buying a house and your debt to income ratio, we call that DTI, it's how much you owe divided by your income. If your debt to income ratio is low, let's say it's in the 20s, then it's probably not going to hurt you. You still want to have the conversation with your lender. Hey, I'm getting ready to go out, buy some furniture. I want to make sure that a $500 a month payment's not going to hurt my chances of getting this home. If you're really pushing the limit on what you can buy and you're approved, and that extra $500 payment could throw you out of being approved. So always call your lender first before you do anything. Buying furniture, buying a car, doing anything that's going to hit your credit report. You want to have that conversation with your lender just to make sure it's not going to be a problem. One of my first deals I ever did with an agent on helping a person buy a home, a gal went out and bought all new furniture. She financed it. And we do that soft credit check in the beginning, and we got notified that she had financed some stuff. She had to return it all. So she had to return all the furniture.
No.
She didn't now the stuff wasn't delivered. Like she was going to get it delivered after she bought the house. We found out the day before settlement. So she had to go back to the store, return all the furniture, and then we had to have proof that it was all canceled.
Oh, gosh.
Of course, as soon as it was done, as soon as she settled, she went out and got the same furniture. But we have to have our numbers. We have to make it work. And sometimes we're like within tenths of a percent for debt to income ratio to make it work, and any little thing can throw it off. Increase in homeowners insurance can throw it off. An HOA that we didn't know was there could throw it off. A condo fee could throw it off. Taxes that are different. Sometimes here in Carroll County, you have properties that are zoned agricultural. The people that are living in those homes currently, they may have an exemption for paying property tax. They're just paying, let's say it's a 50-acre home, and 40 of those acres are zoned agricultural. Well, you get a discount if you say it's going to stay agricultural. Mm-hmm. If you say, you know what, we're not going to have any horses, anything like that on our property, we're just going to straight residential, well, that tax bill skyrockets. Yeah. So you want to be careful with that. You want to have those kind of conversations with your agent up front, like what are the impacts of these types of properties, and get that talk through with your lender in advance. So many little things pop up.
Yeah. And speaking of agricultural, so you brought up a good point. Do buyers need to, if they want to keep it agricultural, do they have to grow crops, or can they just have horses?
There is, believe it or not, there is a formula. I don't know what that formula is. You can grow crops. You can also have chickens. You can also have like goats or pigs or whatever it is. But per acre, there's got to be so many chickens. I don't know what those number of chickens are, but per acre, there has to be a certain amount of livestock. So the best place to go is the county. To find out what that equation is, and then figure out how many pigs you have to pick up to make it agricultural.
That's funny, but good point. So is there anything else that you have experience with that calls you to make that call that says, I'm sorry, we can't fund your loan?
Fortunately, I haven't had to make that call too often. Usually I'm able to find out the problems in the beginning, but not adding credit, during the process, keeping your job, not retiring. Another big thing is assets. So with your assets, we look at your bank statements. We go back 3 months to see what's going on in there. Cash deposits Like if you just, let's say you had a yard sale, you're getting ready to move, you're going to sell all the stuff in your house you don't need, and all of a sudden you have a $3,000 cash deposit into your account, and you want to use that for your settlement. You can't. You can't use cash. Even though you deposited it into your account, it's still considered cash. Why do we not let you use that? There's a number of reasons, laundering money, fighting terrorism, things like that. So cash is no good. So if we're getting ready to go to settlement and we ask to see your bank statement, and all of a sudden we see all these large deposits, we got to source all that stuff. And if you got a gift from somebody or someone gave you money, then we have to find out where it came from. We have to get letters. So be careful what you're putting in and out of your bank accounts. Yeah. So we're going to ask you questions. I did a loan for a friend. I hope they see this video. I'll make sure they do. Where everything was done through Venmo. So his sister was paying her portion of the rent to him, and she made little comments in the you do the comments.
No, yes.
So we had to get Venmo. Like Venmo has account activity, has statements, just like your bank statement. We had to get Venmo statements, and not only were the comments from his sister, but all his buddies and stuff like that. Whenever they went out and had beers, like all those comments are there. They're all written right there on the statement. So the underwriter and I, we got a kick out of some of the stuff on there. But just don't move money around. Try to have your money where you need it to be 3 months in advance, because we really don't look back past that 3 months.
Right. Now, when somebody's applying for a loan, what do they need to provide for you right off the bat, up front, so you can see, first of all, if they qualify for a loan, if they're eligible, and to get the process, what's needed to get the process started?
I mean, me personally, I like to see the W-2s and pay stubs, or tax returns if they're self-employed. I don't like, not that I don't believe people, but people make mistakes about their income all the time. I joke around that I'm not really just a loan officer. I'm a person that solves problems that you don't even know you have. And we don't even want to tell your realtor that you have these problems, because it'll give them a heart attack.
Yeah, we don't want to know.
But I want to see those financial documents. I want to see their bank statements. I want to see where the money's coming from. So if you tell me I've got $50,000 at Bank of America, that's what I'm using, I want to see those statements. That way I can see, was there a large deposit in there? And we want to talk about that right away so we can get that sourced and taken care of. I want to see your pay stubs and W-2s. I want to see your pay stubs up front, because sometimes people forget that they have something coming out, a deduction on their pay stub. I've seen that happen where someone, they make great money, but then there's a $500 deduction on every paycheck. Well, what's this $500 for?
Yeah.
Oh, I did a 401k loan a couple of years ago. I'm still paying that back. Well, we got to count that against you. A lot of times, if you have a judgment against you, the court will take money out of your paycheck to pay that. Child support sometimes comes out of the paycheck. So we want to see those pay stubs in advance to kind of figure out exactly what the income is. Sometimes people make the mistake, how much do you make annually? They'll say, I make $40,000. Then you get their pay stub and they make like $50,000, $60,000. They don't understand the difference between net and gross. So that they think that what they're getting, the direct deposit, is the number I'm looking for. I want to know the number before they take the taxes out, before they take all this stuff out. Other than that, I need to see income and assets, and I really want to pull the credit. No matter how early in the process it is, I want to pull the credit, like we talked about earlier, just to fix any problems.
Yeah.
Most of the things that come up on credit, as a good loan officer will make suggestions on what to do to fix that problem. Parking tickets, pay them. Collections, pay them. You can negotiate most stuff. I found out that collection agencies, the people that answer those phones, they're paid on commission. So, and if you owe $3,000 and you haven't paid it in 6 years, they're willing to take just about anything, because it's been 6 years. They're probably assuming they're not going to get anything. So if you negotiate with them, they'll take pennies on the dollar in most cases. Yeah, you may not be able to get that from the first person you talk to, but if you say, hey, can I talk to somebody else? I think we should do another video just talking about that kind of stuff, because I do have some good ideas on that.
Okay.
But Yeah, there's a whole thing I could do just on paying back collections and fixing your credit.
That would be a great video.
Cool.
That'd be great. Okay, and I just want, if you're still watching this video, I want to make it clear that on my end of things, when I'm working with somebody, I do not get involved. I never see the pay stubs. I never see credit reports. I don't see the financial information is strictly confidential between yourself, the loan officer, and the buyer.
Mm-hmm.
Now, I get involved when you issue what we call the pre-approval letter, and I do have a video about that. So right up there is the link to that one. And I then communicate with you to make sure they're qualified and what they can afford and what the down payment's going to be and that sort of thing, so we can put an offer together. But I strictly do not at all get involved in personal finances.
Yeah, I'm really not allowed to share that information with you either.
Yes.
I can't tell you their credit scores. Loan officers shouldn't be saying with like that. It's private information, so we don't share that either.
Yeah. Well, thank you.
Awesome.
And Bill's contact information is going to be right here at the end if you want to contact him. If you have questions about a loan, if you have questions about buying a house, you can contact either one of us, and we'll make sure you get the answers you need.